大家好，我是 Steve，又到了礼拜二的下午，来给大家稍微分享一下我对现在股票的看法。那大家都应该很熟悉，就是我平常看的几个 index 啊，一个是 DIA，就是相当于这个道琼，是相当于 S&P 500，那这个就是QQQ，那这是 financial。我们先来看一下这个我们要开始练习哈，我们大家通常一倾向都是看最近，其实老师教我说先看一下长远的感觉。我们最长远的感觉，我在这个图里面最长远的感觉就是要白线，这白线的话是200天的 moving average。200-day moving average, you can see that this 200-day moving average is white. So you can see that actually QQ is right way above 200 moving. This is good news. And here for this SPY, just recently moved above 200. This is good, okay? This is very significant. So there are some key point to explain to get through to you. Then if you see this one, this FAS, you can see this so far below the 200 moving average. So this presents another way to look at this. And do you see white line here? No, you don't see white line here. Why is that? It's because what Dow is even worse. If you actually use the same time frame to look at it, you cannot even see the 200-day moving average. So what do we have to do to see the 200-day moving average? What you have to do is actually to shrink it. So once you shrink it to a longer period of time, you can see that now it's here, it's reaching here. So if I do the same thing for the rest, then you can see some idea now, okay? I shrink them, and I shrink them. So you can see that how everything is. So now let's blow it up again. First idea is that 200-day moving average is a very important moving average people are watching. So usually when the stock is above 200-day moving average, it tends to be turned into the bullish pattern. So actually you can roughly say that QQQ is in the bull phase for some time. That actually crossed the 200-day moving average is about in the middle of the April. So this is the first point we want to go through. The second point is actually something I just recently learned. That is that saying that if you actually see your candle move above 200-day moving average, and if you can see 3 days in a row, that's a green candle. Green candle means that actually open is higher than close. Open higher than close, and actually it's keep going higher. If you actually open below the close, then will not be red. So it's actually meaning that it's telling you it's also solidify the bull trend. Therefore, usually my teacher said once you here, you can in a very bullish mode. I should not say very bullish. You can in the bullish mode and start to add position. But you will ask me and say, oh, wow, Steve, if you're going so much higher, so what do I do? What if I buy it and it drop off? Okay. So here is another knowledge you need to have to that. When we say this moving up here, it's usually meaning that when it's pulling back, it tends to go higher instead of keep dropping. Of course, nothing is 100%. But once you see this, the chances buy the dip is the right decision. If you actually is below, so let me make it easier to remember. If you are below 200-day moving average, you probably should not buy the dip. Actually, you should sell when it go higher and fail they call sell the rip. When it go higher and start to go down, you should sell. And so instead of when it drop, you buy. But once you go to, that's in the bearish phase. Now we change to the bullish phase, meaning that when it's going up, when it pull back, then you can buy, then you chance are it's going to go higher. Then you go back, you just buy the dip, until it fell down the 200-day moving average again. This is a general principle. Of course, you already learned a lot of the candlesticks, so we can use other sign to help you to make the decision. So what is the message I want to give that to you is that actually, if you are still less than 30% long, actually the most important thing is that if you actually are dollar averaging people, don't even worry, just keep buying your dollar average, because you can see that from this chart, this longer term, if you buy the dollar average, keep buying, even if it drop, you don't worry, keep buying that and keep buying higher. So essentially, whatever if you actually never sell anything, even you have such a big drop, when you move higher back to here, you're still back to your original. Then in the meantime, whatever you buy, the time point you buy is below now, you are actually gaining. So that's the power of the dollar averaging. So this is the major thing I want you to learn. If you actually learn that, you don't want to learn anything else, that's fine. I think you will do fine. But if you are more interested to do a little bit more, then learn from here. Then we'll watch my video and learn from me, and to see when to get in more and when to try to get out a little bit. So for now, you actually can start to think about going in to buy more long. But if you worry it's going so much higher, then you worry it will be dropped. So you actually can wait until it come back, buy the dip, and hopefully it will go higher. But if actually when it's dip and it keep dipping more, then you just get out. You have your stop loss. You'll still be fine. Okay, so that's the message I want to give to you. So let's look at a couple of individual stocks. So get some idea. Okay, so now I'm going to show you the daily and the weekly chart. Okay, first let's look at this Apple. Apple, you can see here, actually this is sideways here. Notice that they are still only in this period of time is above the T line. So Apple is still in pretty good shape. So here you want to, if you want, you can start to think about buying or buy the dip, then see what happens. Or else, this actually is not the best buying chance. So you can wait a little bit for the Apple. There's no clear buy signal to my eyes. Okay, so let's look at some more. How about let's look at Amazon. Amazon here is actually this is a gap up, and again it's kind of struggling, but now finally move higher. So for the very aggressive people, probably want to wait until this break out the top and then get in, or else you probably want to watch. So let's look at the next one. This one actually is kind of so-called a J hook. It's a little bit advanced case. So, but look at the price. This is probably not for the faint of heart. Okay. Let's look at the Facebook. So you can see all this actually so far is like going very high, then pull back and going higher. So for anybody actually considering it, need to be very careful in the sense, because see here is a doji, then it's going higher. So actually this is a T line. To me, this is kind of promising, but again, this is not clear buy signal, okay? But if you actually really want to be interested, you can try, because this is kind of go above this resistance, is going higher. So you can try here, but make sure your stop loss is here. So you're not going to be hurt by this. And if actually it keep going higher, you will make some money. So far, it's not something is very encouraging. Okay, this is more encouraging. If you look at the FedEx, why do I say more encouraging? FedEx, if you look at this, of course, this is low. Here, from very far from here, you can see that this is drop and drop, and here you have this hammer. Then you have let's blow this up so it's more obvious to you. So this is downtrend. Then you stop at the bottom here. You have hammer. So it's possible it's going to be reverse. Then the next day, actually, people are hesitating, so form a doji. But you have a very good jump up here and go close above the T line. Then see, then you never come back, look back. So actually, looking back, here is this couple of days your buy signal. If you buy signal here, if you buy here and use T line as your support, you would have been making money through the time to here and to here. You're still here, way above here. You're making money from 115 to 131. This is the thing why it's worthwhile to learn about candlestick, because you can see that the previous few famous chart, you look at that, you say maybe, may not be. But here is when you see, you have to be able to catch whatever in here and take advantage of it. Imagine if you actually buy in here, then you use your T line as a stop loss. You only have to worry about 1918 to about 116, 115, 114, $4 difference loss. It's not a big loss compared to $117. Then when it jump higher, you're making money. So this is one thing to do. And then now, if you actually don't see this region, then you just look at this region here. This is now it's consolidating. So then you ask me what you should do. And I say there are two things you can think about. One is to think about that, okay, you say, let me find, as of now, can I find more chart like this to go in? Or you can say here is consolidating for if you break out from here, then I can consider this to buy. Because imagine this one, if this go very high, then you will talk about this region similar to this region. This is harder to grasp, but that's the best I can explain this to you. So I think people probably are interested in talk about the Gilead, but if you actually look at the Gilead chart, you will say this is probably not a good chart because it's going down here and it's consolidate. This actually gives you some hope that we probably can do that because it's oversold, and this is a bullish engulfing. So if you actually get encouraged to buy here, then you are okay, then you are okay, then you are okay, then you drop here. So actually you're not making much, but I think if you want to try, you could have tried it, and by sticking with the T line, get out, you will not lose a lot anyhow, okay? Because if you get in here, then you see this, you don't want to get out, at least you want to get out here. You probably lost $2, $3 from this trade. So Gilead actually not that helpful, okay? Let's look at Google. Google, if you look at here, this is something I think also for people not so familiar with candlestick, we're having a little bit trouble to handle this, okay? Look at here, this is a pretty bad chart here, okay? Actually, we make this red. See, this going higher here, then you have a consolidating here. Actually, that's good. One consolidating, but once consolidating, when it actually have gap up, you will say, what do I do with this gap up? I don't want to spend that much money. What if it drop? Remember, whenever you have a good stock, why this has a gap up? Actually, apparently it has a good earnings, so have this gap up. So meaning the company is financially doing really well. So how do you handle this? Usually when you have a gap up, there is a chance the stock will keep going higher. So what you need to do is actually to watch, to follow that closely in the next few days to see when will, because whoever make buying here will feel happy and trying to take profit. So you want to get a sense when the profit taking is over. So you can see here, profit taking, profit taking, profit taking, profit taking is over. So it's going higher. So this is my teacher teach that when you have a gap up, you actually watch until the profit taking finish. You may have this 45-degree going higher. So you actually have this gap to make money from here to here. And now here is a testing time now, because this is actually you have a overbought and you have a bearish engulfing. So what do you do now? Okay. You can say there are a couple of things you can think of. One, you say, okay, it's fine, but because it's still above T line, I want to stay with that. So you stay with that. Then the next day it closed below the T line. And then you say, okay, I'm out. Okay, so if you get in some from here, then you actually get out. You actually don't make money. You feel frustrated. Okay, but however, then you don't give up. You actually get out. You get kicked out. Then you come from here. Then you wait and wait. Keep watching it. Then it break out again. Then it actually keep going higher. So you're making money from here. So you have this gap to make money. So now when this gap going down, you actually make money. So this will be the very strict rule you follow the candlestick. If you want to be a little bit more flexible, which is a little bit trickier, you have to learn a lot, start to be able to do that. You say, I'm making money, but because I see this signal, I'm a little bit worried. So even from here, even if it's still above the T line, I will just take half of them out. Then here I take another half of them out. Then actually you could preserve some money here. Now once here you go higher and you start to buy that, then you will do a little bit better than that. Okay, that's what. Of course, the most brave people who actually make more money, but they can lose more, is that they say, Google is a good stock. Okay, so and it has a good earnings. So when it goes down to here and here, I'm willing to even here. I'm not worrying because it's still above T line. This is breached the T line. I'm worried, but because of Google is a good stock, I'm going to stay with this to say what happens. So then you wait another day, it's still kind of struggling here, then you coming back, then you actually recover everything. So that will be the person make the most money, but that is going to be nerve-breaking for some people, because if this doesn't go higher, keep going lower, you actually lose a lot of money. Then you kick yourself and say, why have I not get out of here? These are like this very fine point. If you want to learn more about this fine point, I don't do this so well all the time myself too. But if you want to learn more about detail, please just text message me. I will be happy to share more experience with you. So now let's look one more. The Home Depot. Home Depot, let's look at this. If we keep going back here, do you see clear buying signal, which we may actually miss to make the money? So let's see. Now looking back, if usually when I try to look back, I like to do this a lot to track back to see what do I miss. So if I go with this, you see actually other than this one, if you follow the Home Depot actually respect the T line pretty well. So you can say here, this is breaking up and starting from here, getting here from April 6th, and start to do stay with this. You make from 192 to 252. That's a whole lot of money here, okay? I actually make money from Home Depot, but I did not make as much as it should be, because let's say I'm getting in here. When I am here, I probably get out, and then when I see another chance, I get in. Then I'll keep staying at some point and get in and get out. So eventually, I'm still making money from the Home Depot. I hope today's information helpful. Okay, thank you. Bye.